This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yes, indeed. Across Bloomberg platforms, it's a Fed Friday.
Right?
All
right. I like that. Yeah. We had a Fed Wednesday earlier this week.
You did, because you got
minutes.
FOMC minutes, right? Today, of course, it's a big day. We've got a new Fed chair, Kevin Warsh, being sworn in earlier at the White House. So we're going to dig into that. That is certainly front and center. At the same time, with just about 2 hours to go, you are looking at an S&P 500 that's heading for its longest streak of weekly gains since 2023. So in a few years, we continue to see that push higher when it comes to the U.S. equity trade.
Yeah, pretty much been a straight path up for the S&P 500 going back to the end of March, up 0.6% right now. This week, Carol, as of now, up more than 1.1%.
All right, but the move higher certainly over the last month or so. Hey, so we're going to talk about the trade. We're also going to talk about hopes for progress on a peace deal in the Middle East. That's actually going to come your way later on Bloomberg Businessweek Daily. Meantime, ahead of the long holiday weekend, keep in mind the bond market wrapping up the trade for the week. So we are going to talk about a new day at the Fed, as Kevin Warsh is now officially the new Fed chair. We're also going to talk to the head of Qualcomm's Automotive, Robotics, and IoT business, Internet of Things, especially when it comes to self-driving cars.
Yeah, and that deal with Stellantis. And Stew Leonard on the cost of your Memorial Day weekend barbecue. He's going to be joining us. And I think he's going to have some suggestions for food to buy, because that's what Stew Leonard does.
We're taking bets in the newsroom, holding up a lobster, some shrimp, like what will it be? All right, let's get you going on this Friday, folks. It is Friday, yay. Let's get to Charlie Pellet with a check on the trade.
Thank you very much. I'm pulling up a record right now on the Dow. Dow, S&P, NASDAQ, all advancing, but the Dow Jones Industrial Average trading at a record at 50,732. The Dow up 447 right now, up by about 0.9%. Hopes for a deal between the U.S. and Iran, fueling Wall Street optimism, driving stocks toward their longest streak of weekly gains since 2023. The S&P this week on track for 8 weeks of gains. Right now on the week, the S&P 500 index is up by 1.1%. We've got the S&P currently higher by 0.6%. No record right now has to top 75.01 to be a new high. NASDAQ up 0.5%. The NASDAQ 100 index up 0.8. The Bloomberg Mag 7 index up by 0.1%. 10-year at 4.55%, with the 2-year currently yielding 4.12%, and the 30-year is at 5.06%. Spot gold down $26 the ounce to $45.16. That is a drop of 0.6%. And West Texas Intermediate crude now at $96.09 a barrel, down 0.3%. Oil has been swinging between gains and losses as traders assess the outlook for a peace deal to end the war between the U.S. and Iran. Brent, the global benchmark, at 102.73, up now by about 0.1%. Oil majors are declining, even as oil advances. ExxonMobil shares down 0.3%. Chevron, little change, just about flat on the day. As for ConocoPhillips, also little change, up now by 0.1%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So persistent inflation, political pressure, Fed independence, question mark, rising U.S. debt, a war with Iran, maybe more geopolitical actions to come.
As you always say, Carol, it's complicated.
It is. We've also got a White House that definitely surprises and takes actions that impact the global economy and global markets. You've got a massive technological change, AI. We talk about productivity gains. We talk about the cost of it. Some are saying it's a disruption technologically that we've never seen before. We don't really know how it totally impacts, but that, Tim, is our world.
And the world at 12:10 p.m. Wall Street time, Kevin Warsh inherited as he was sworn in as the chair of the Federal Reserve by Supreme Court Justice Clarence Thomas. President Trump nearby. The Fed's dual mandate still front and center.
Our mandate at the Fed is to promote price stability and maximum employment.
What are you trying to do to me?
When we pursue those aims with wisdom and clarity, independence and resolve, inflation can be lower, growth stronger, real take-home pay higher, and America can be more prosperous. And no less important, America's place in the world more secure.
That, of course, was Kevin Warsh earlier at the White House, sworn in by Supreme Court Justice Clarence Thomas. President Trump, of course, nearby. We knew we wanted to talk really more about the macro, the environment facing the new Fed chair, Kevin Warsh. What we know about him from his past views on things. With us, a killer roundtable. Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent, and Stuart Paul, Bloomberg Economics U.S. and Canada economist, right here in studio. Welcome, welcome. We did our planning call. We're like, let's get these two guys to talk about the new Warsh world and what he is dealing with. President Trump said that Kevin Warsh will be able to do his own thing. Mike, let me start with you. Will he be?
For a little while.
Yeah.
The president has a tendency to say things that either aren't true or change his mind. So I'm not putting a lot of credence in that, but it does give Kevin Warsh a little bit of a runway getting started in terms of not cutting rates, because you can't cut rates with inflation doing what it's doing, with the war going on as it is right now. And it was kind of ironic, that sound from Kevin that you just played, because to do what he's talking about doing may require raising interest rates. And that is the exact opposite of what the president said he wanted in a Fed chair. But maybe Scott Bessent has convinced the president that it's better to not pressure a guy into doing something that everybody knows is wrong.
Well, Stuart, come on in here, because Federal Reserve Governor Chris Waller said he supports making clear that the Fed's next move is likely, just as likely to be an increase as it is a cut. So, you're starting to hear people say, in addition, traders now betting on this too, that the next move could be higher.
That's right. I mean, there's definitely a bet in the market that the next move is going to be a hike. I'm not entirely convinced the next move is going to be a hike. For one thing, when financial conditions tighten, markets are doing some of the heavy lifting already for the Fed. So at a minimum, it buys the Fed a little bit of time to be more prudent, to be more cautious.
Wait, where are conditions tightening right now?
So we saw 2s and 5s are up 75 basis points over the last 2 months. 10s are up 65 basis points. The intersection of financial markets and the real economy is mostly at the long end of the curve, where interest rates start to affect things like home prices and mortgage rates and so on. We see buying conditions for things like durable goods, things that are financed typically, and buying conditions are deteriorating materially. And so when that's the case, the Fed can afford to be a little bit more cautious and prudent. I just want to hone in a little bit on what we heard from Kevin Warsh. And exactly to Mike's point, I think that the most important line, even the most important phrase, is that the Fed has to pursue its dual mandate with independence and resolve. That hits my ear at least a little bit hawkish. So as much as we know that President Trump is, as he was a self-professed low interest rate guy, the world that Kevin Warsh is moving into, I think he even recognizes requires someone who's both independent and perhaps leaning incrementally hawkish.
This is a good thing, a really good thing to kind of heard that. I want to ask, and just throw this out to both of you. We were thinking about, a new Fed chair era. Is this significant, Mike? Like, you have covered so many different heads of the Federal Reserve. You've been in Washington. You've questioned them. Is it significant when a new Fed chair takes over? Is there also a period where they're kind of learning the ropes a little bit?
Well, yes, he'll be my fifth Fed chair that I've covered, but it takes a little while for somebody to settle in. Now, Kevin Warsh worked at the Fed for 5 years, so he knows basically how the place operates. Much has changed in the 15 years since he's been there, but he will have a much better feel for it than the average person just coming in who had never been there before. In a way, circumstances are working in his favor, because even if he wants to cut rates, there's 18 other people on the open market committee who get a vote on this, and he's got to be able to make a convincing argument to them about whatever monetary policy is going to be. And if they're going to be on hold indefinitely, then he doesn't have to push something on people or try to get a consensus on something that isn't very obvious or isn't something that everybody wants to do.
So dare I ask, politically, does that mean he could have it both ways?
Yeah, he'll have it both ways for a while. And
because he could personally say, this is what I think we should do, but I can't get everybody on board.
Consensus says.
Well, I don't think you want to say that right away, because then you're admitting you don't have a lot of influence. I think he will probably say basically he doesn't like forward guidance, so he'll probably say we're going to be attentive to what's happening and do what monetary policy must do under the circumstances at which time we're voting.
Let's talk about this practice of issuing forward guidance. President Trump says Kevin Warsh will curtail the Fed's practice of doing so. Stuart, is that good or bad? Or what does that mean for folks like us who watch it? What does it mean for investors who watch it and economists who watch it?
Frankly, I think it's a good thing for policymakers to preserve some optionality. The more forward guidance they offer, the more they back themselves into a corner. For folks like me who want to understand what the Fed is going to do next, look, it makes my job a little bit harder, but that's what I'm here to do.
Does this mean no more dot plot?
Well, so I think that he wants to move away from the dot plot. I think he wants to move away from the summary of economic projections. The next dot plot that comes out in June is going to be a very difficult dot plot to try to explain to the world, especially if most of the members of the FOMC are going to eliminate any cut that they had marked for this year. So it's going to be a very difficult one to explain under the best of circumstances. And I think that it gives him even more of a reason to want to move away from the dot plot and the broader SEP.
So, Mike, what do you think in terms of the summary of economic projections? Has this been a good thing? I mean, you've seen several cycles. I don't know, when did it first go into effect?
It first started under Ben Bernanke after the start of the great financial crisis, but they've been talking about it for a long time, putting out some kinds of forecasts rather than just the individuals talking about it in speeches. The thing about the summary of economic projections is it's generally fine, the idea of saying what you think inflation and unemployment and growth are going to be, because those are the elements that are going to make up your decision tree for what you do about rates. The problem is that we have gotten into this situation, and it's partly because they use the dot plot, and it's partly because of Stuart and my fault, that we look to the median, and everybody on Wall Street tends to think the median is a Fed forecast, and it's not. It's 19 different forecasts, and so they do have a problem with the dot plot. But when I talk to other members of the Open Market Committee, a lot of them agree that it's not the best way to present things, but they say we need something. And so until you have a better idea of what we could use to kind of give people an idea of the path and why, we're going to probably have to stick with the dot plot.
I want to go back to your point about the dot plot getting rolled out under Ben Bernanke. Its real value to policymakers was to indicate that they had no intention of raising rates in the future, and so they could flatten the curve through their communications process. That was really the use of the SEP when it was rolled out. When you have a period of high inflation, when you have a period of uncertainty, when you're going through global shocks that have nothing to do with monetary policy and that really can't be addressed by policy,
like a global pandemic,
like a pandemic, like shutting down the Strait of Hormuz, like supply chain snarls and lack of access to aluminum in North America. When you have things like that, the SEP just constrains your opportunity set. It doesn't help to provide any sort of communication that's valuable for addressing rates further out the curve. And I think that that's something that Warsh definitely recognizes, and he doesn't want to be backed into a corner.
Yeah, one problem, too, with the SEP is that the Fed does it 4 times a year, and markets recalibrate the economy 4 times a second. So the narrative on Wall Street is always that the Fed is behind the curve. And so even if Fed officials want to change their forecast, it's harder to get that across. As Stuart was saying, you've got you've got this SEP out there, and people may think that they're constrained by it. Now, an individual bank president might say, I'm not constrained because I've changed my mind, but people don't necessarily know that. So they're thinking that this is where they're going to be.
I want to shift a little bit and just talk about the economic landscape right now and the U.S. consumer. We're going to be speaking and kind of doing a deep dive on retail and the consumer in the 3 o'clock hour. And the picture that has emerged as some of the big box retailers have reported this week is that there's a worry that their customers are really starting to feel strain as a result of higher gas prices. So, Mike, how does Warsh come in, Fed Chair Warsh come in and address a consumer, a portion of consumers that are starting to feel under pressure in a more inflationary environment when there's sort of uncertainty around the end of a war and when that will actually bring fuel prices down?
Well, there's not a lot he can say, because the Fed's goal is going to be stable prices, which means probably the might have to raise rates, but inflation is going up. He can do what Jay Powell does at every press conference, come out and say, we recognize this is very important to Americans and the pain people are feeling.
The beginning and the end of
thing.
every press conference
But
he did, right?
there isn't much he can say about what the Fed can do to help people at this point. It's not in their power. They can raise or lower interest rates, and that's about it.
Yeah. Well, there's going to be a lot that actually happens before the first FOMC meeting that Kevin Warsh presides over. That's June 17th. We're going to get data points on jobs, CPI, PPI, all before the next Fed meeting. I'm just thinking about, in terms of the data right now and what it shows, and what are the drivers, in particular, of inflation. I was reading about the build of AI, the cost of chips and how that plays into it, the higher energy prices, of course, because of the U.S. war in Iran. What is temporary? What is the real inflation story right now, Mike, when it comes to the U.S.? There is still higher inflation, right? When you add it all up.
And when you talk to Fed officials, they're noting that the inflation has started to broaden out some, and you're seeing it in service areas that people thought were done, and the idea that tariffs were going to, we'd seen the peak and we were going to see things go down. That may not be the case because we've got more tariffs coming up. So they are concerned about it. Now, in general, the Iran war is driving the headline numbers because of energy prices. So if that starts to come down, if the war ends, then Warsh has the opportunity to say, Mr. President, I can't cut rates today, but we're on a path to be able to do it. And maybe that is the best he can hope for.
Look, I think that what's interesting is that Kevin Warsh is in a position where he has said himself that inflation is a choice that central bankers make. And we're living in a world where there are a lot of supply shocks and there are a lot of fiscal policy decisions that are taking place that are themselves inflationary. So the only extent to which Kevin Warsh has any control over the decision about inflation is to lean against demand, which is not something that he wants to do. We heard just this morning that he wants to deliver more growth, that he wants to deliver higher real wage growth, and basically he needs to wait for the inflation pressures to dissipate. And so what does it end up meaning for him? It is just a waiting game. He needs to see low aggregate labor income and low aggregate and low real wage growth start stifling that broadening of inflation pressures that Mike was just alluding to. We know that policymakers are worried about that broadening of inflation pressures. That's being facilitated by things like elevated tax refunds. And until we start to see a narrowing of the breadth of inflation pressures, Kevin Warsh is going to have to stay on hold.
30 seconds from each of you. There's also that guy in the background. What's his name? Oh, Jay Powell. What's the impact of that, Mike?
You said Fed Friday. I was thinking Freaky Friday. Kevin Warsh and Jay Powell wake up in different bodies, in each other's bodies. Jay Powell, you're not going to hear much from him or see much from him.
But does
he's just going to stay as low profile as possible.
Okay.
But he's a presence there at the Fed.
He's a presence
and in the
there,
meetings.
and it is going to be a little harder for Kevin Warsh because he's got to deal with him in the room when they're all talking, but he doesn't want to have to face him, have a public face-off.
Look, I don't think that Kevin Warsh is going to be intimidated by Chairman Powell. I don't think that other folks in the committee are going to be swayed by Chairman Powell. I think that more importantly, folks in the committee are adequately independent and assertive in their own right, and we know that enough folks on the committee are hawkish enough to prevent any sort of missteps in the dovish direction.
Great stuff. Thank you both. Really appreciate it. Michael McKee, Bloomberg TV and Radio, international economics and policy correspondent, and Stuart Paul, of course, Bloomberg Economics, U.S. and Canada economist. When we come back, Qualcomm, self-driving cars, we're going to put it all together for you. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Kevin Warsh is now Fed chair. Dow Industrials at a record. Stocks are pushing higher. S&P up 8 weeks in a row, and oil is back in the green. Right now, the S&P is up 46 to 74.91. That is a gain of 0.6%. Now, it's all about hopes for a deal between the U.S. and Iran, fueling the optimism today. The Dow up 458, up 0.9 at 50,743 to underscore. That is a record. NASDAQ up 0.5%. We've got the NASDAQ 100 index up 0.8, and the Russell 2000 index of small cap shares outperforming, up just over 1%. The VIX below 17 with a 10-year at 4.55%, the 2-year 4.12%, and the 30-year 5.06%. Gold is at $45.15 the ounce, down 0.6%. West Texas Intermediate crude has been bouncing around 96.57 a barrel now, up 0.2%, while Brent is trading higher by 0.8%, 103.42 for a barrel of Brent. We're keeping an eye on Stellantis shares, up 0.6%. Stellantis plans to reinvigorate its Chrysler brand with new low-cost models, all part of an effort to address affordability concerns. Chrysler is going to be introducing 2 models that will start for less than $30,000. Recapping S&P up 0.6%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Tim. Tim?
Yeah, I'm here. Charlie's here. I'm
Hi,
here.
Tim.
Hi.
Hi, Charlie.
I know it's been a couple days since you've seen me.
I've been on the road. I am
How was
so
the trip?
sleep deprived. Well,
Good.
We'll talk about it later. The flight out, like almost 6 hours.
I meant
delayed.
the whole project.
The shoot was really cool.
Okay, good.
It's
All
really
right.
good stuff. Insight on retail, AI, company you know.
Okay.
It's some good stuff coming your way. I'm just going to leave it there.
Okay, that
All right.
sounds good.
We're going to go to tech
Nice
now.
tease.
It's a deep tease. Top gainer in the NASDAQ 100 right now is Qualcomm. It's also a top gainer in the S&P 500. Shares are up more than 20% in the past 3 trading sessions. Yesterday, you guys were dealing with this news, right?
Yeah, Stellantis and Qualcomm expanding their multi-year collaboration, integrating Snapdragon digital chassis systems on chips across the next generation of Stellantis vehicles for cockpit, connectivity, and advanced driver assistance systems. Non-binding letters of intent for AI Motive to join Qualcomm Technologies. That's owned by Stellantis. That bought AI Motive. That's the Hungary-based AI and autonomous driving software company. That was back in December of 2022. So a little bit of a background for this partnership.
Try to explain it because we've got a great voice to talk about it. Let's head to San Diego right now and to Qualcomm's head of its automotive, robotics, and IoT businesses. Nakul Duggal is with us, joining us. Nakul, so great to have you here with Tim and myself on Bloomberg. Tell us about this partnership. And I want you to kind of go into exactly what this means by expanding it for those who understand your world and maybe for those smart investors who don't totally understand it. Break it down for us.
Thank you, Carol. Thank you, Tim. Great to be with you. Yeah, our business in automotive has been on a tear over the last many years. We are going to exit FY26 at a $6 billion of annualized revenue, which has grown up 8x over the last 6 years. The partnership with Stellantis is actually one of a kind. We've been building for the digital future of cars for a number of years, and physical AI, as you know, is coming into every single vehicle. The digital chassis that we build essentially allows an automaker to be able to modernize all of their vehicles across the board, from connectivity to the in-cabin experience to the driving experience of a vehicle. And this partnership with Antonio and Ned at Stellantis is a one of a kind. This essentially means we get to deploy, starting in model year 28, across all of their platforms, from Chryslers to Fiats to Dodge to the Peugeot brands, the Citroen brands, across every global footprint the Stellantis vehicles are deployed in, which is really every market outside of China, our entire fleet of products. This is a new change in the way Stellantis is developing their vehicles. It's one single architecture that gets homogenized so that you can move fast. You can become a software company, working with partners across the board to be able to bring self-driving capability, AI into every single cabin, and of course, connected vehicles. And we've been building this for really the entire industry over the last many years, and this is what we're going to do with Stellantis.
So if somebody buys a Stellantis after that model year, any vehicle across Stellantis' portfolio, as you mentioned, after that model year, will Snapdragon technology, this technology that you are talking about right now, be included in that vehicle?
That's right. And we are already a supplier to them, and this is now going to happen across ADAS, cockpit, and telematics.
So what does that mean for the driver experience?
You are starting to now see AI essentially come to the fore, especially for platforms like a car, which is a physical platform. It's your daily driver. It's something that you spend a lot of time in. And bringing AI into the in-car cabin experience essentially allows your personal space to be completely transformed. We've been preparing for this with the entire ecosystem. We've been working with this with companies like Google, with, of course, our automotive suppliers and partners. And Snapdragon cockpits are now AI ready. That means the experience that you will have in your in-car cabin experience will be no different than what you're starting to see on your smartphone. You can have a conversational experience with your car. It shops for you. It sets up your appointments. It entertains you. That experience in your car changes the entire way that consumers will engage with the vehicle. And then the same thing extends over to the driving experience. So as you're starting to see technology like FSD get deployed very broadly, this is also something that's part of the partnership that we've built with Stellantis, where we will power their self-driving stacks along with our silicon. And this essentially is a brand new type of product that starts to get deployed starting 28.
Nakul, it's an expansion. So you guys were already involved, right? In terms of not only kind of the AI or experience, that sounds like it's taking it to another level, but you were already involved in kind of the mechanics, if you will, or the inner workings with Stellantis. Is that correct?
No, we've been working with both Fiat Chrysler and Peugeot for a number of years.
Yeah.
I think this big shift is really as the technology transforms with AI becoming such a central part of the transformation of the car, this allows us to be able to help Stellantis move into this new architecture. And to do this across the board, as you know, the car industry is complex, a lot of different architectures. This is going to be a one-of-a-kind change because this is one common harmonized architecture across their entire global fleet of vehicles. So any change that is made brings that experience to every tier of vehicle deployed across any part of the world. And that is what makes this partnership very unique.
Is it exclusive? I know it's an expansion of the partnership. Exclusive, or are there other companies, AI or tech, that are doing similar parts?
This is a partnership between Stellantis and Qualcomm on all of the silicon and all of the self-driving software capability, and of course, all the connectivity that we are building. So it is something that we are building. We are the ones that are their dedicated supplier for this next generation.
Why expand it and why now? And talk to us about the financial opportunity for what it means for Qualcomm.
For us, we've been growing our business in automotive actually by looking at the car architecture and thinking about it in the context of what is the digital product mean for a car. And to do that, you really have to be able to envision what type of technologies a car is going to deploy. AI has now become very central, both for driving, but now also in-car cabin experiences. You have to focus on every tier of vehicle that you have to supply to. You have to focus on the global nature of this business in that this is 90 million cars produced all over the world. Automakers are designing for a software product. We are growing our business. We've been growing at about 25% plus over the last many years. And we really see automotive as this definition of what a physical AI product looks like. And so far, it's really been going great. We are super happy with the way that the business is growing. We're going to share more at the Investor Day that we have coming up in June. We will talk a lot about what we are doing in automotive and of course, other areas.
Well, you've done a lot in automotive for a lot of years with a lot of different partners, of course, apart from just Stellantis. You're working with Chinese EV makers as well, Toyota, Honda, BMW, Mercedes-Benz, among others. Since you have such a good view on what you are calling an embodiment of physical AI, what's a realistic time frame for you to tell us that we as drivers will be removed completely from the equation when it comes to this technology?
I would say that the driver completely removed is probably much farther out because this is at the end of the day a safety product. But I think that the car essentially taking over for a number of scenarios where the driver is involved but perhaps not deeply engaged, that is upon us now. And maybe let me describe it like this. I think the rate at which AI is accelerating, even I would say in the last 12 months, the capabilities of the models, what they can do, both for conversational AI, the human-facing AI, but then also the machine and the physical AI. The car is probably one of these products, one of these parts of our life that is so central to where you spend time, your personal time, your time with family. It is a global product. You will start to see, I would say, in the next 2 years, AI entering the digital cabin and cars becoming much more intelligent in terms of the way that they are driven. This will drastically accelerate because all of the other pieces are in place. The silicon, the the SoCs, the silicon is in place. We've been building that for a number of years. We've standardized the architectures. We have made them such that they can be applied to really any tier of vehicle. We are obviously doing this globally. This is not specific to any region. So this acceleration is something that every automaker has been waiting for. And I think the Stellantis deal is a reflection of how quickly can automakers really leapfrog a legacy way of working, a legacy way of thinking, and just embrace what is bound to happen. And this deal for us was actually an indicator of how fast this is actually coming. I would expect by 28, you will start to see this get deployed across multiple parts in the Western world.
Yeah, we're going to stop soon calling it a car, I think. We're going to call it, I don't know, we're going to have to come up with some other name, because if you think about the amount of technology that are in our vehicles today, it's just pretty astounding.
I mean, a lot of observers have said you have to think about Chinese EVs as smartphones with wheels.
Yeah.
But I don't know if we're there.
Yeah.
It's hard for me as a New Yorker who's like doesn't have a new car, doesn't spend any time in cars to relate. But.
My car is in full self driving, and it's old. It's more than 10 years old, but you can literally take your hands off the wheel and it drives itself. Like the systems have been.
Are you sure?
It tells me to put my hands back on it after about 40 seconds. But it is pretty amazing, Nakul, what we're seeing. And what I'm wondering about in terms of, I was just looking at the FA page on the Bloomberg. You guys are, at least the forecast that we have, I guess, from the street and guidance, looking at over $42 billion in revenue for you folks this year when you wrap up the fiscal. But I'm just thinking, I think you guys shared some numbers that in the second quarter of this year, you guys clocked $1.33 billion in automotive segment revenue. How much more could it be as a result of deals like that this becomes maybe a bigger part of your top line? And just forgive me, about 45 seconds here.
I think it's a great question. Look, I think we've been preparing for the way that this business is growing. I think this deal that you saw is an indication of the market saying, hey, we are now ready to really scale up. I would say that the car becoming a digital product, both on the self-driving side and the cabin, is going to happen across the board. And every automaker is now essentially waiting to figure out how do they accelerate that. We've been growing 25%. I think we see similar trajectories continuing, certainly in the near future.
Sounds like it could be even a much, much bigger part. Hey, listen, stay in touch. We love talking about this stuff. Nakul Duggal, he is, of course, head of Qualcomm's Automotive, Robotics, and IoT business, of course, at Qualcomm, as we said. Stick around. We're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got just over an hour to go until it is on to the weekend with the Dow, the S&P, NASDAQ all advancing. Dow Industrials trading at a record at 50,717 right now, up by about 0.9%. The S&P has to close above 7,500 for a record 74.90 where we stand right now on the S&P. It is on track for its 8th week of gains. That is the longest weekly rally since 2023. Right now, we've got the S&P up 45, up by about 0.6%. The NASDAQ Composite Index up 0.8%. The Russell 2000 Index of small cap shares is rallying by 1%. All of this with the VIX below 17, the 10-year at 4.55%, the 2-year 4.12%, and the 30-year 5.06%. West Texas Intermediate Crude has been bouncing around. Right now we got WTI once again trading lower, down under 0.1%. Little change. Barrel of Brent, though, the global benchmark does remain higher. Brent crude 103.20 right now, up by about 0.6%. Uber exploring options for a full takeover of Delivery Hero to better compete with DoorDash outside of the United States. Today we are seeing shares of Uber. They are trading down by 2%. Rival Lyft, both based in San Francisco, up 1.8%. DoorDash up by 1.5%. Recapping stocks higher, the Dow at a record, S&P up by 0.6%. Carol and Tim, that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, it's the unofficial start to summer.
Did anyone tell the weather that?
It always rains.
It's rainy and cold.
It's rainy and cold.
Yeah.
It's kind of a
earlier
bummer.
this week here, and look, I know we're broadcast all over, so forgive me for just talking about sort of like Northeast weather right now, but I was talking to my dad about this, and my parents used to live on the East Coast. Now they're on the West Coast, and he said, "Oh yeah, Memorial Day, whenever we were on the East Coast, was always like the weather was always terrible."
I have to just tell you, I used to march. I used to play clarinet, and I was in a marching band.
Okay.
And so we always marched in the Memorial Day parade. And it was
We're
always...
We're going to need some video of this.
I swear to God. And it was like, we had little jackets and we like...
Oh, no, I believe you. I just want to see it.
But it was always like dealing, like, could we march? Would we get it done before the rain started?
I think some parades this weekend might be canceled.
All right. Yeah. So fingers crossed that maybe they hold off. I got to say, though, we're talking about a lot. We're thinking about Memorial Day. We're thinking about what goes into a Memorial Day picnic and celebration. This is happening as global food prices climb to their highest level in more than 3 years as the Iran war disrupted supply chains. We kind of kicked it off talking with Stuart and Michael McKee, of course, about inflation concerns, and that includes food. So we've got a great voice to get into all of this.
Let's head to Stew Leonard's in Norwalk, Connecticut, to the president and CEO of Stew Leonard, Stew Leonard Jr. joins us. Stu, happy summer. I just want to start off with the question, is it a happy summer at this point? What are sales telling you? What are customers telling you?
Well, first of all, hi, Carol and Tim. How you doing? First of all, the thing that would make me happier if you didn't talk about all the rain and everything that's supposed to happen this morning. That doesn't help our sales. We want everybody to go out and barbecue and cook cheeseburgers out in their backyard. No, but I would say right now, sales are brisk. Customers are buying, but they're also complaining. Okay, they're complaining about the prices of food right now. And not only just food, but I think their overall, expenses in their normal lives. Like as an example, the other morning, I got a phone call from our tomato farmer in Florida. He said, I got some bad news. He said, we had a big freeze down here. I had to replant my crop. Tomato prices are going to be up. And it's going to cost me $2,000 more to send a tractor trailer truck from Florida up to the New York area to your stores. And then I come down here in the store and I'm talking to a customer that just said, hey, I just went and filled up my Suburban and that cost me $50 more and my energy costs at home, insurance, everything. So I'm stuck in the middle a little bit. On one hand, I got to negotiate with this farmer, which I did, and we're going to split the cost, but I can't raise prices. So our prices at Stew's compared to last Memorial Day are probably up about 3%. They'd only be up like 1% if it wasn't for meat, Mm-hmm. And you asked me about some props earlier, but, here's one of our great...
tomahawk.
This is what, if you can put this on the grill this weekend, for Memorial Day, it's a crowd pleaser.
But Stu, it would be, but that's going to set you back. I mean, you're talking about a very expensive cut of meat there. And you mentioned cheeseburgers earlier. Mike McKee talking to us a little earlier, and he said, at some places they're charging you just for walking by the meat department. That's how expensive it's gotten.
But one thing people are doing is they're switching from their proteins. Like, that's obviously the most expensive thing you can buy is a big ribeye steak. But then you can also go down to just getting some plain hamburgers. So we notice people switching a little bit. They're going to chicken. That's only in the $4 to $5 a pound range right now. They're going to pork. I've even been doing that. Instead of having a steak, get a nice pork chop, and it's like $10 a pound less. So
how much is that tomahawk that you held up per pound?
Oh gosh, I bet you this will be about $70.
Okay,
to get this, but. Hey, if you went to a restaurant and you ever ordered something like this, you'd be paying $150 or at least double or more for that thing. So
how many people can eat that chop?
Well, how much would I eat?
I know my husband be like, that's mine, but I'm just saying 2 or 3 people could probably chop into that, right?
Oh yeah, for sure. It really depends. I mean, who's a big meat eater? Your husband probably would love to devour. I got a son-in-law who loves meat all the time, and he could make a big dent in that thing. So, right now you're seeing people really just trying to save money. But you know what? The thing with meat right now is we're at a 50-year low in herd price sizes in America. We just had some of our ranchers back from the Midwest, and they're really just saying there's just less cattle. And why is that? Because, it costs them a lot of money to feed them. because of the droughts and everything that happened in the Midwest. And there's not as much, grass out in the field for the cattle to eat. They got to import the corn and the soy and alfalfa for the cattle to eat. So,
Stu, that was a problem. I feel like last year too. Like we've been talking about the herd situation for a while. Is that, as you talk to the ranchers, any of that going to get better or easier or no?
It's getting better now, but it takes 2 years to really grow a little calf from like 300-400 pounds when they're born, all the way up to maybe 1,600 pounds when they're harvested. So it takes time, but you're seeing it build right now. It is growing, and that's why I'm optimistic about a couple things. One of them is I do think meat prices are going to be coming down in the future. Even our ranchers and everything agree with that. And the second thing, I really think fuel prices are going to come down once we get things straightened out in the Middle East, which can't be forever. I mean, it's got to be resolved at some point. So I think we're going to see some softening on these inflation numbers as far as food goes in the future. But here's what's really interesting, Carol. I think you have to break up this inflation into supply and demand and actual cost. Like from our standpoint, I'll give you an example. You can go buy this watermelon right here. By the way, watermelons are great right now. They're really sweet. So here's a watermelon. You can go buy that. It's about $6 or $7 at the store. Or you can do this. We can have somebody cut these up. The labor for me to have a nice lady or guy back there cutting these up, it's for us nearly $25 an hour right now without benefits.
And that's never going down.
That's never going down. And so there's a couple things that are not going to go down. Labor's not going to go down. That's inflationary right now. But I think the supply and demand of food, like for instance, I always laughed when I would read about people saying about egg prices. Eggs had nothing to do with inflation.
Right.
That had no government policy or anything. That just had to do with the avian flu. So supply and demand is built in. And if you look, we just had some fires out in Simi Valley, as I mentioned, the cold snap down in Florida.
Right.
So the droughts out. These affect food prices.
Well, we got to run. Always love checking in with you, Stu. Happy Memorial Day. We're going to keep our fingers crossed you don't get rain. Stew Leonard Jr., of course, President and CEO of Stew Leonard's. Enjoyed talking with him. We talked with his daughter, Blake, who runs their spirits and wines business a little bit earlier. Hey, coming up, stocks on the move.
Get the Bloomberg Businessweek newsletter, BW Daily, delivered to your inbox every weekday. It's the power of Business Week in a handy form. Sign up at Bloomberg.com/newsletters.
You're listening to Bloomberg Businessweek Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading. Carol Masser, Tim Stennebeck, live here at Bloomberg headquarters in New York City. Just taking a quick check in terms of the trade. We have seen stocks certainly moving higher on this last trading day of the week as we get ready for the long holiday weekend. Up about 0.6% on the S&P 500, up about 0.8% on the NASDAQ 100. Do you want to mention, we just talked with Stew Leonard Jr., and we didn't have time to talk about it, but he certainly has a mission that they think about a lot at the company. It's a personal one, but it's really about water safety. Always, especially when it pertains to kids.
Yeah, he lost his son back in 1989, and they established the Stew Leonard III Water Safety Foundation. That was after he drowned at just 21 months old, their son. And since then, the foundation has raised $6 million for water safety awareness, education initiatives, and it funds lifeguard trainings and then free and low-cost swim lessons for children in need each year.
So we just kind of wanted to call that out. I know I've been around a lot of kids growing up with pools and so on and so forth, or just at lakes, and the ocean, and you just want to be super, super careful around the holiday season. All right, we did say we're getting ready to wrap up the trading day and the week overall. I'm Carol Massar along with Tim Stanovic. Let's also get to some stocks on the move this Friday. Alexandra Semenova is with us, Bloomberg News stocks reporter, and she joins us with a look at some of the names. Alex, good to have you here.
Hey guys, good to be here. There's actually a lot going on the corporate side, even though we're heading into holiday weekend. The first company that I'm looking at is Uber. They are apparently looking to have a full takeover of Delivery Hero, which is a delivery service platform that is based in Germany. Apparently they want to better compete with DoorDash overseas. They had actually announced earlier this week that they boosted their stake in the company and are apparently looking to boost it even more. They've been working with Morgan Stanley on this. This is a great scoop on the Bloomberg terminal. Just looking at the share price, Uber is actually down 2.3% today on the news. However, Delivery Hero, whose shares are listed in Frankfurt, is up about 50% this year. It has a value of around $11.8 billion. So will be really interesting to see how this plays out. Of course, this is a space that has been heating up, so many delivery platforms.
Well, you nailed it when you said so many delivery platforms. It's a really competitive space.
It really is.
It's tough to compete in the space. Plus, I don't know about you, Carol, at least, look, again, this is the New York City, view, but the fees that are tacked on, the expense, at the end, sometimes it ends up costing like 25, 30%.
We've canceled an order after we go through and we're like, this
you get
is crazy.
a sandwich, suddenly it's $30.
Yeah,
exactly. That's
yeah.
exactly, or 2 hamburgers or something. And we're
also,
like,
in a city like New York, you can just go outside and go to any restaurant and get something.
Just
or
walk
take a
down
walk.
the street.
Exactly.
Yeah.
that is so true. All right. So Uber is one name you're watching. IMAX, another one.
IMAX, better news for the movie theater. So it is actually exploring a sale. It approached some entertainment companies to explore the option of being bought. This is according to a scoop from the Wall Street Journal. Looking at the price right now, shares are up 15%. It is having its best day since March 2021, which is, of course, during meme stock mania. And apparently, movie theaters have been making a little bit of a comeback. I want to give a shout out to a couple of my friends, Banu and Lyra. We actually have a little club going where we go to the movie theaters every quarter now.
I love this.
Do
Yeah.
you go to an IMAX?
We don't. We do look to go to a theater that is a little different. We went to one around Union Square that is a little bit more historic, and that was a great time.
It's kind of an experience then, right?
Yeah, exactly. Yeah. So IMAX shares are doing well on this news, and also apparently it has to do with premium screens. So people are looking to have a cool experience when they go to the movies. Think reclining chairs.
Exactly. That's the challenge, I think, in sort of the post-COVID world, is that especially as more and more movies are coming out closer to the windows shrinking, how long it's in theaters, you can, I was able to watch Marty Supreme recently, and look, it took us 4 nights to watch it because we don't have that much time. Yeah. But it had just been in theaters, just a few months ago. Right. But what do you have to provide something in the theater that you're not going to get in your living room. So a huge screen, a reclining chair. Yeah.
Yeah. Well, it's a pleasant experience. You can't just be sitting in a chair.
Yeah.
I also feel like it's a movie that's an experience. The last one I went to was Barbie, with my daughter, and it was just a small theater.
That was a while ago.
I know, a small theater in the Village, and it was it was a lot of fun. But I don't know. I agree with you. I want to be in my jammies eating popcorn watching it.
Marty Supreme is good.
I heard it was really good. I haven't watched it yet.
Yeah.
Okay. Lenovo.
Yeah, that company doing very well on its earnings because of its AI business. Always good to hear that AI is being monetized for these companies. It reported that profit jumped 38%, while revenue grew by around 20% for the fiscal year ending in March. And this was because of AI-related revenue. So it accounted for 38% of the company's overall sales last quarter, growing at an 84% rate.
That is pretty strong
pretty incredible
numbers.
Because all these companies are spending so much on artificial intelligence technology, and it's not really clear whether or not their efforts will be profitable. So good to see a company where it actually is.
And you're watching the ADRs of Lenovo?
Yes, that is U.S. listed shares.
Yeah, LNVGYUS is the ADR ticker.
Up 18% right now, also best since 2021.
Up 70% year to date, the ADRs. I didn't even think about them as really kind of an AI play, but it makes sense, right? All of these companies.
Basically everything is an AI play these days.
You're AI. I'm
No.
AI.
You're going to be AI.
How dare
You're
you?
AI.
How dare you?
All right, maybe not yet. Alex, thank you.
Thank you, guys.
Always. Alex Semenova. Check out her work on the Bloomberg and at Bloomberg.com. Check out Stock Movers Podcast. Find it on Apple, Spotify, or anywhere you get your podcasts.
Coming up next, we are talking retail and the consumer. That's next on Bloomberg Businessweek Daily.